Hello, everybody. Thank you for joining us today. And
There's a familiar face. Hi, Adam. Thanks for tuning in. So this is first of what we hope will be, a recurring podcast hosted here at our offices, Helge Capital offices, and we're really happy to have with us today Demetrios, CEO of Boston Pads, Salpoglou. Sorry to you're on a first name basis, but Demetrios Salpoglou.
Thank you for
If I'm
having
saying
me.
it right.
It's a pleasure to be here.
Yeah, and we'd connected I guess several months ago now, and had several very informative, wide-ranging discussions on the Boston market, and wanted to see what we can do together to develop and kind of enhance our conversation and bring it out to a wider audience. Also, of course, I'm joined today by Oleg Uritsky, CEO of Helge Capital. Deep experience both owning, operating, and developing throughout emerging neighborhoods in Boston. And we're particularly active today in Revere, but own over 750 units from all the way up from Lynn through Revere and into various neighborhoods in Boston. So, it seemed like a natural connection to Boston-based, Boston-focused firms with deep experience and history to kind of open this discussion up more broadly. So I know, Demetrios, if you wanted to kind of get us started, kick things off. I know you've got a broad view on the Boston market, and I'd love to hear some of that.
Well, thank you. So, Boston in and of itself, we're always in a chronic shortage of apartments and housing. And part of that is just, well, there's a number of factors there, right? We've got the regulatory environment, we've got NIMBYism, we've got limited land. And so what it tends to do is, and I think just in terms of general population growth, we're always under what we need to be to deliver enough units to keep that affordability. So it's great to see, and I think we cherish developers getting as much done as quickly as possible, as much as possible.
Yeah, certainly the goal. It's not an easy process here, and I think it's something we're always kind of bearing in mind when we talk with investors around the country. That Boston, in the Boston market, Massachusetts, it's just a very different environment for bringing new supply online.
Yeah, it is. It's littered with challenges, and one of the things that I think is interesting is the Revere market and how, when you look at, and I wrote an article, I think it was in like 2004, and you and I think we're talking about that.
Absolutely.
It was 7 miles worth $700 a square foot, and I compared the distance, which was about 15-minute commute, a cost per square foot to buy in the Back Bay versus buy in Revere, and it's astounding, right? So it depends on where do you want to live, and what your goals are, and if you want to save money, et cetera. Well, the same thing could be said with the value play, I think, in Revere, right?
Absolutely, yeah.
And when you look at the data, it's outstanding, right? So you look at like the average. So on Boston Pads, we have over 17,300 landlords, and we track data, and we look at we separate both the luxury landlords, which are really luxury buildings, versus what we affectionately call the mom and pops. So if you strip out that data and you separate it, and you look at the mom and pops, the average, just we'll call it the mom and pop apartments in Boston, is not much different than the luxury that you get in Revere. Or said another way, you can save about $1,000 per month if you're comparing Boston luxury to Revere luxury. So said another way, you might be able to save about $12,000 a year for similar amenities.
I know we've talked about it many times. It's exactly the value proposition that we try to reiterate with our investor base is, 15 minutes on the tee is worth $1,000 a month. And in some cases, you really look at it and you say, getting to a place like downtown Boston from Revere on the Blue Line, versus if you were, say, way out in the seaport trying to drive in against traffic and rush hour, you're spending the same amount of time for a Boston address versus a Revere address in many cases. So, that value proposition is definitely, one of the many things that it attracted us to the city. And I know, Ola, you want
Chris,
to
I think you made
jump
a very interesting observation. I think as far as the review is concerned, I think that kind of first came Boston, right? Then came South Boston, so to speak.
Mhm.
Then came Seaport instead of South Boston because the Seaport that used to be South Boston, what they call it, right? So now it's a Seaport. Then came East Boston
For sure.
Mhm,
Yeah.
mhm.
and then I think Revere is next, or Revere is on its way to become Seaport, East Boston, and it's quite remarkable. I mean, 15 minutes on a train line, right, on the Blue Line, and you are in downtown Boston. So
Yeah, and I know
you can beat that.
Yeah, and I know Nikolai and I spend a lot of time on this daily, trying to convey this sense that, we have a sense where Revere is heading, not because it's a unique case, but because it's actually has a number of analogies within the broader Boston market. We call them the emerging neighborhoods of Boston. And a lot of them, the key factors there, it's transit oriented, it's around transit hubs. They're areas that, you have easy access in and out of. We've seen this in a number of cases. I don't know if you can show some of the slides there. They're pretty stunning. When we started to play around with Google Earth, it's got a great feature where you can actually go back and forth 10 years historically versus the present day. And we said, we all talk about the seaport. What does the seaport really look like today versus where it was 10 years ago? And I remember walking around. It was a real adventure to get there, and it was filled with parking lots and really not a ton of reasons to be there in many cases. If you were looking for a great place to eat or shop, you'd be in Back Bay, you'd be in Beacon Hill, you wouldn't be out there. And so we want to take it away, Nikolai, on these.
Sure. And then
Parking lots.
what we saw happen over the last 10 years is Seaport has turned into a beautiful community full of developments, and everybody has seen this, I'm sure. And it's just a dramatic difference between 2010 and 2022. And we all know that this has been a significant impact on the local economy and the price of rent, especially in the Seaport.
Yeah, I think people would have scratched their heads if you told them, I want to live in a vibrant new area. I want to live in the Seaport in 2010 or even earlier, 2008, 2009. It'd just be like, oh, okay, you're going to be in a loft in Fort Point, and maybe, and that's as far as you can get into that.
Yeah, it was amazing to watch it develop. And as an avid sport fisherman coming out of Charlestown for 14 years straight,
yeah,
it started with the Joe Moakley courthouse, and then it just started filling in. And before you knew it, you were like, how did it all fill in so fast? It was amazing to see.
Yeah, I totally. I mean, and I think that's what we think Suffolk Downs will look like when we look at it in terms of just sheer land and acres. In some ways that WS development, Seaport Square, compared to 160 acres that HYM has under its ownership at Suffolk Downs, it's just the geography, the scale of Suffolk Downs is just, it's mammoth compared to the Seaport, which is huge in its own right.
Yeah.
I think the next one we like to take a look at is Assembly Row, and everybody at this point knows Assembly Row, but it only recently has turned into what it is, right?
Yeah.
Chrissy, you have a very good memory of what it looked like because you used to live in the area, right?
Yeah, I live in Somerville now, and so I've got a great sense of what it's like today. And it's honestly, it's very hard to find a parking spot. It's that busy, it's that bustling. You go there for restaurants, you go there for shopping. And but at the same time, I remember, I think Demetrios, we were talking the other day.
Yeah.
There's a Kmart
Yeah.
in that strip, and nothing next to it. Looked very much like this.
It was a huge parking lot. You could drive your truck and pull your e-brake when there was snow and kind of spin out, and it had so much space, and you couldn't do that now in 2 seconds.
Yeah, no, I mean,
Or 2 seconds.
yeah, it's so it's. I mean, I think that, and I think we've kind of heard from even HYM in their own marketing materials looks at Suffolk Downs as probably the closest analogy being Assembly Row. And Assembly Row, Orange Line, full mixed
I would say,
use.
Chris, it's even better.
Yeah.
Like, if you want to live in the seaport, you can only watch or you can only look at the ocean, right?
That's true.
If you live in the Riviera,
Yeah.
or in the Riviera beach area, you can swim in the ocean. You can, in
Yeah.
the summertime, you can take a walk in the ocean. You can
Absolutely.
in the ocean, right?
No, it's a
Get your feet wet. So I think it's even better.
it is. Yeah, no, it's a great point.
And you level up too. I mean, I think the other thing is having watched luxury buildings themselves improve over the last 20 years, you keep seeing, when you build this new community, well, you're getting a new community that everybody wants to go to. But in addition to that, then you have the beach on top of that. So it's like,
Yes.
it's like having a cherry on top of a sundae, if you will.
Yeah, no,
It's been a forgotten place for many, many years.
yeah, it's a great point that that is kind of that when we look at these analogies, that is the separator. It's the beach, it's the parkland, Belle Isle, Marsh, Revere Beach, the ability that, yeah, if someone wanted to, they could be swimming and on
Restaurants.
15 minutes versus they could be in
Yeah.
downtown Boston.
And that's very common in the urban development, that first come residential buildings, right? That
Yeah.
has to be, the people have to be there first, and then small businesses, law firm, accounting firms, and the restaurants. That's when it becomes a community. So I think for many years, Revere hasn't really been a community. It just, that is now in the last 5 or 7 years. So, yeah, 5 years.
And here's another also perspective of Revere Beach. This is the southern end of the beach. Just a few years ago, it was completely empty. And as well, we see the Ryder and 90 Ocean has been built.
That's our building on
Uh,
the ocean.
and just this small area has turned into a community in itself, with
Yeah.
lots of people who really like to live there because of the many amenities that it provides.
And I think that a lot of the folks who are so attracted to some of the places like 90O or Ryder, these are young professionals who are looking at the Boston landscape broadly and saying, all right, for 2 bedrooms, I can spend $4,300 in Back Bay or the Seaport or downtown, or I can get that same 2 bedroom, brand new construction, and be able to go for a jog in the evening along the beach and get to my work, no problem, on the Blue Line. It's it starts to become a very compelling
Well, I think,
story as a value. Yeah.
yeah, and I think that, and if you look at it a different way, the workforce is changing. I mean, it just is. And you've got more people now than ever living a hybrid work lifestyle where they don't have to go into the office that much. Now, that was on the backs of COVID to begin with, but I think that COVID just accelerated what would have naturally happened anyway. So I think when you have an amenities, you have beach, you can walk. I mean, there's nothing, I think, stopping anybody in a hybrid work environment for going on a jog, maybe not too long,
Yeah.
in the middle of the day.
Sure.
Right. So you can kind of integrate your lifestyle. So you don't have to be in such a congested city or deal with the commutes. I mean, Boston has, I think, and don't quote me on this, but I think it's the 4th worst traffic in the world, if I'm not
I'm
mistaken.
surprised it's even the 4th worst. I thought it was higher up on that list.
Maybe I know Tokyo's
Being a
bad.
Boston driver.
Yeah. But I mean, if you have that, well, that certainly would take the the edge off it for me when I'm looking out at the ocean and seeing, dark blue. I think it can calm you down for sure.
Yeah, absolutely. So that's a great point and a key thing that, in some of our designs around our developments here, we've emphasized things like work from home spaces or conference rooms and created that and incorporated that into the common space as we design it to really play up that aspect of the community.
And we finally get into Suffolk Downs as well. We mentioned it a minute ago, but we haven't taken a look at their vision for what they're trying to create. And you can see here what there is at Suffolk Downs right now. There's a little bit of construction going on the northern side, but the community that they're building will really impact not just the city of Revere, but probably the entire greater Boston area.
Yeah, and Suffolk Downs, obviously, it's mostly in Boston. It's I think 2/3 Boston, 1/3 Revere, and we're excited to develop right on that line between the two for many reasons.
For many years,
Yeah.
driving by those white things, the gas tanks or whatever you call them, the storage tanks, and finally they will be gone.
Yeah.
Yeah, we're excited. We're excited to see those going. We're also, I think, really excited. The space you have here allows for a true mixed use community with office, with life sciences, biomanufacturing, alongside your retail and restaurants. So, we're excited to see this as truly an environment where, people have what they need at their fingertips within that community. They can, of course, access Boston, access nature, but if someone wants to live, work, and play right where they're at, they'll have that availability as well.
And that's it. That's all the images we have in terms of past and present emerging neighborhoods. We can cover a little bit of
Yeah, I know.
the power of marketing and how Boston Pads helps landlords fill their vacancies, and basically kind of how important it is for landlords to utilize that.
Well, I appreciate that. I mean, I think, real estate's local, and I think you have to have good local marketing. I think you have to have a good team that can, rent your properties, but get, in this environment right now, we have a very, very low vacancy rate.
Yeah.
So now that can change from year to year, different things happen, but having a good team that knows the product, that can get it out and syndicate it to the most places, I think, on the internet as quickly as possible is clutch. And having a good pre-marketing plan for a new building is super important. I think in terms of the way we do it, we have a lot of hyper-local sites. We own RevereApartments.com as an example. We have BostonPads.com, but we put it out everywhere on the internet, not only on, Twitter, Facebook, TikTok, you name it. We shotgun that listing to the most places and distribute it to the widest audience possible. So you get you rent your apartments the fastest with the most highly qualified candidates in the shortest period of time.
And that's of course what we're always trying to do and kind of striving for, because at the end of the day, it comes down to tenants. It comes down to, minimizing your vacancy, increasing your credit quality and strength of your tenants, finding the right fit for the buildings you own in your positioning.
Yeah, it comes down to eyeballs. I think getting your product out there is a mathematical quotient. And if you can provide the greatest exposure to your property to the most eyeballs, chances are you're going to attract people from a wider audience, where if you get it out there, people say, oh, let me take a look at Revere. Let me take a look. Well, I was living in Lynn, or I was living in Malden. Wow, that looks great. So you want to shotgun it out and syndicate it, not only through all the national portals, although they have some challenges with too much stuff out there that's outdated, if you can look at a good local provider that has accurate information and then syndicates it out to the most social media places, you're going to get a lot of people to come look at it, and they're going to be highly qualified.
Yeah.
I think you're going to not have any problems renting over there, especially with new products.
I was always interested in your background, Demetrios, around that particular, coming from a real focus in technology and applying that on a very local basis to the Boston real estate market. I think it makes a ton of sense, and I think very uniquely positions you, because I think in some ways real estate tech can be this behemoth like CoStar or Zillow, Apartments.com. It's got no local touch, no local flavor or knowledge. That just, it's just churning out kind of, it's a machine without kind of a brain in some ways, it seems like to me.
Yeah, that's an excellent analogy. I think you don't want to ever cut out human beings, right? You need human beings in the process of getting your apartments rented, and having good showing agents that know the product and can talk in easy speak, comparing it to other luxury buildings, comparing it to other areas, comparing it to prices, showing them the amenities, driving them around, showing them the local restaurant. That has a huge impact in where people decide to live. So I think that's also why you need agents involved in the technology process, not completely cut out of it.
No,
And what's so valuable also when your approach, and I think both of our companies resonate very well about this, is the locality, is the geographic focus that you have. It goes to show that you can't go and approach real estate as a broad type of investment, almost like
it's all local.
right. The more local and focused you are geographically, the more of an advantage you have over anybody who's coming in from a different country or a different state. And I think this is what gives both of our companies quite an advantage.
You're absolutely right. I mean, even just watching the data, the web traffic by neighborhood, you can see different areas explode by search volume, by search traffic, and even just developing properties a few streets over, you can have a dramatic increase or decrease in rent, but you can see the patterns. And what's amazing about real estate is if you look at the patterns, you can see those emerging patterns. And we have so much analytical data now, it's just understanding it. We have it, and I think that's where, years of experience in real estate, like yourself, spent, you can see where it's going with confidence next. Because to your point, Oleg, we watched South Boston explode. We watched the seaport fill up. Then we saw, go over to East Boston, where the logical progression is. But then even when you're there, ground zero, a few streets over where you can put your next development that you can hit with bullseye accuracy just by looking at analytical data. So it's really taking all those factors into consideration. You can make great business decisions. And you can add supply, which we definitely need. I think that's what everybody appreciates.
Yeah, I think that's a key point and a good segue around the supply discussion. I mean, and I think that, I would talk with a lot of investors, many national investors who are looking at the country as a whole, and they're focusing on places like Phoenix or Houston. They're focusing on, markets that it's very tough because we're just such a different market here in Boston, in that both demand is underpinned by very stable industry, healthcare, life sciences, higher education, but the supply has never seemed to connect and bring down and meet where the demand has been. And so I don't know. I know, Demetrios, you've written on this extensively and publicly commented on it, but your perspective.
Well,
Control comes into
Yeah.
well,
I mean,
that would be
we don't have a lot of land. I mean, that's you look at cities like Atlanta, you look at different cities, you can just drive out a few miles. There's farmland, and you can do. I was on the phone with an agent that used to work for me that's now in Virginia, and they're looking at like a 550 acre development.
Yeah.
And you're like,
It's mind-boggling.
It's mind-boggling how
Yeah.
big the developments are.
I mean, to Suffolk Downs, it's huge at 160.
That's right.
And we're like, it's just,
Yeah.
it doesn't compute.
It-
Like that'd be half our East Coast.
Yeah, it's like compute. It's like that's all of Boston, And so it's very, we are so different than other developers. When you talk to developers in other parts of the country, they're like, well, we're just going to build it. And you'll get, I was talking to a developer that's built over 1,000 units in Florida. And he said, well, my city councilman vote was 188 multiples, city council votes, town council votes across different regions that they had built in Florida. And it was 188 to 0. Not one person opposed it. That's an entirely different, core philosophy mindset that we have here. The flip side of that is when we finally get something built and we finally get it out, it's gonna rent. You're not gonna have this 10% vacancy rate or even 5% vacancy rate because we're not building enough. When you look at the permitting pipeline, it's low. So
I think I saw an article in the Boston Globe that it was decreasing. Yeah, exactly.
It's decreasing. And so I think, when you finally build something, the stability of that asset is incredible. Getting to that is really, really hard. And what I think that we need to pay attention to is we don't want to make it any harder than it already is. It's already too hard. What we need to do is streamline that process to bring in more supply. And so I think that, any impediment such as rent control or any other thing is another headwind in development and supply, because I think we can only bring affordability through more supply.
Totally.
It's tough, Places where the control is, there will never be good development. There will never be progress. There will never be a community, a sense of community as a new community. That's not going to happen. And we've seen it in different places.
Yeah, definitely does seem to have a chilling effect. And it seems like, I think when we were talking to Demetrios, it seems like in Oleg, it kind of is a cyclical thing where it almost, I think we have the experience of it coming into Cambridge, several decades back. And it always seems to look like a good idea at the surface very simplistically, and then upon implementation, just have really bad effects for both the housing stock, the renters, landlords, kind of everyone involved in the whole process of creating housing for a vibrant, growing community. It seems to stifle all of that in ways that, for whatever reason, certain politicians find very difficult to understand or don't look at the history.
And what's important to understand is it never happens right away. You notice the effects of rent control over a longer period of time, which makes it more difficult for people to understand the correlation there.
Yeah, I mean, the question I think you might ask yourself is, would the seaport have been built, that beautiful seaport that we look at, if rent control had been in place 10 years ago, would the seaport look the way it does now? I think the answer is no, because when, Oleg, you're an experienced developer, that the deals have to pencil, right? And then there has to be a strategy there because people, developers don't want to work for 3 years and then make zero money, or they don't want to work for a long period of time and not make any money. It's a business. They're running a business. They employ people that want to get things done, and adding another headwind to it adds noise to the equation, which ultimately may even scare away future investors, et cetera, who knows? And so I think that, there's the key ultimately is to continue to do what you're doing right now, which is to develop great new product. And that's how you build a city. That's how you build a great city. That's how you build a great neighborhood, is bringing in new supply continuously. And then looking at our older housing stock and saying, okay, maybe it's time to retire this housing stock and then rezone different areas. So maybe you have 2-3 families that are next to each other that are now, a lot of our 3 families are 100 years old, right?
Yeah.
So
amazing. Yeah.
it might be time for retirement, right? And so maybe you allow plots to get combined, assemblage more readily, more easily, add another floor, maybe 2, and you start bringing in better quality housing, sprinklers, more environmentally friendly, more environmentally sound practices. So I think
to renovate
entirely.
No, that's absolutely a strategy which we've pursued in our our value add strategies. That there are a lot of units that have been rented forever by the same families, and sometimes we look at assets that are 30, 40, 50 years old that have been one owner, built by the father, and it's now the children. And sometimes some of those fixtures and finishes look like they're original. And you look at it and you say, you know, this is a market where, you know, housing is an important piece of people's lives, and we want to be delivering a quality product with fresh finishes, nice
Yeah,
lighting.
In the rent
Agree.
control, you cannot,
Mhm.
it's just not gonna happen, you know, if the building is old, dilapidated, and brings certain dollars in revenue, that's gonna be forever, because rent control prohibits that, you know? And I hear arguments that's what's happening in the city right now, that the new proposed law is going to allow for 10% increase every year, right? And the new proposed law is going to exempt the development from rent control for 15 years. What many people do not understand, and the danger is that once the state passes the law, nothing prevents the city from a year or 2 years go back and change that law, what they put in effect. So
Mhm.
it can be, is it 10 years right now? I mean, is a 10% right now is allowed to increase rents? 2 years from now, it can be 2% allowed to increase, or just a cap of 1% or 3%. So that's the danger is. That's what many people don't understand. You know,
Totally.
if they, for instance, the law in the way it's proposed right now, it exempts new building for, I believe it's 15
I
years
think so.
from the rent control. 2 years from now, they can say, you know what? It's very generous. Let's exempt the brand new building on the 5 years. So let's not exempt the brand new building at all, you know? So, and that's what can happen. That's a great danger. Another danger is that once Boston is allowed to have rent control, Cambridge is going to be next. Somerville is going to be next. Quincy is going to be next. Any city, any town in the Commonwealth will do exactly the same, or can do exactly the same. So, and that's a danger. That's what, you know, people don't really understand.
Yeah, and I mean, and then, you know, where does it end? I mean,
What does it end?
it doesn't end, I mean, do you then say to the contractors, well, we're gonna do Home Depot price controls or contractor controls or gas controls? Like, is the
That's
whole,
all the social.
I think that's what it's called.
That's what my family escaped. And I Soviet Union many years ago from the socialists.
I mean, I put it out in out to the world on LinkedIn and many other, and talk with multiple people. And I said, show me one article, because I don't see it,
Yep.
where they say there's rent control has been successful in this town. Okay, you can write that, but where are the analytical facts that actually support that data? Did it increase supply? Did it increase the quality of housing? Did it decrease the amount of fires? Did it what analytical data supports that rent control is a good idea? So if it's a great idea, put it out there. I mean, you know, there's tons of social media outlets to put out that data and that article. But the reality is, it doesn't exist.
It feels, you know, deceptively simple. It seems so easy.
I've talked to
everybody
in the press. I think it's pretty obvious. And I have long discussions with people in the press, and I ask them, I go, have you ever seen an article where rent control is successful? The answer is no. And I said, please send it to me. I don't have one email from anybody from that would show me that it's successful. So I think that's where it's at, because it would have examples in certain towns, cities, states across the country. Here's a shining success.
Yeah.
Never seen it.
Yeah. I guess it's interesting. Our conversations kind of taken a regulatory perspective, and I think that's a good thing. And I think, you know, something that also has come up that I think was a very, at least in my perspective, very innovative and kind of interesting proposal was the former governor's proposal around density and multifamily zoning around public transit. And specifically that certain towns and cities around the MBTA, the rapid transit would be required to have a certain level of multifamily zoning. And I thought it's a very, innovative approach. I think we all kind of recognize from an environmental perspective, from a traffic perspective, from everything else, that density should be higher around areas with mass transit. That's one of our key focuses, is we love to develop around the Blue Line. We love that option that people can take a car, they can take a train. Environmentally friendly, traffic friendly, this quality of life in general. And I'm not surprised, but that towns like Brookline are immediately throwing their hands up and saying this is crazy. But I think Revere in some ways has really been very positive in kind of embracing that. Hey, we are on the Blue Line. We want to see higher density. I don't know if you've followed that one, or think it'll kind of fizzle out, or.
I think you described it absolutely perfectly. I always say all supply is good.
Mhm.
That's my answer. How can any new supply be bad? It can't. So if, as long as that's your bigger, broader goal and objective, developers, I think, should be, looked at as people that are helping society, people that are helping America, people are helping, because the more supply you have, we all know, we saw what happened in COVID, right? I mean, we had such a huge migration of people outside of Boston. They just left, right? And we had these vacant apartments all over the place. And what did developers do? What did owners do? What did landlords do? Well, they went in and started renovating their places. They made it, because like the first time they could actually go in and do work in those apartments, right? Because we're in such low supply, people are moving out and people are moving in. And there's literally like there's no space for us to do it, right? So we're always seeing people trying to do better and get properties in a better condition. And I think that developers should be at the table with city officials on a daily basis, just meeting with them, having a cup of coffee and saying, well, this is what we think. Because I think we know it pretty well. There's a lot of seasoned developers that need to get in, small landlords, mid-sized landlords, large landlords, all discussing that with our elected officials and saying, we know what to do to add supply. Let us help you implement some rules that can get you there.
I think one of the concerns what people have is the traffic, right? So they say, okay, new development is going to add traffic. I would say, I travel a lot in the different countries and different cities. I think traffic will be there. Doesn't matter what it is. It's a part of the society. It's a part of the commute. It's a part of the living, right? So the traffic is going to be there, but increasing the density, increasing the supply of living space, you're collecting more in tax revenues for the city, and that's when you can improve infrastructure. That's when you can improve public transportation. That's when you can improve the trains, the buses. You can improve, Blue Line for this reason.
Yeah,
excellent point.
Of Revere, so people do not have to take cars. The parking is not needed. And look at Manhattan, right?
Yeah.
I mean, it's a vertical, right? It's a vertically integrated place. So all the builders is happening vertically. And so, but
absolutely.
it has a good infrastructure in terms of the trains, So in Boston, I think it does have good infrastructure. I mean, obviously it's a little bit outdated, but it's not, it's fixable. So we have to build, and that's only way to alleviate the shortage of housing, in order to put the rent control in place, where you have to control the prices and not demand and supply. So it's only way to build.
Everything, excellent said. Everything being built now is reducing the carbon footprint compared to older products, hands down, bar none. Because your
compared to
design
suburban sprawl, kind of the 2 cars, 3 cars in the parking lot. Yeah.
and all your amenities are there. So you're not traveling as far to go to the gym. You're not traveling so far to go for this or for that. And so your aggregate commute times are when you have a great encapsulated ecosystem, make it where you're just focusing on getting what you need quicker, and then you have more leisure time and or more workout time, exercise, whatever that is. So it's a better quality of life aggregately. And so I think that's what we need to keep focusing on.
And I just want to bring attention to the chat. David mentioned also that it's so convenient to have a transit-oriented location to live. And I wanted to mention, if anybody else has questions, please go ahead and drop them in the chat. We will address them as they come.
Yeah, and I know on that transit point, that's I spend a lot of time. We'll look at acquisitions. We look at new places for development. I mean, one of my first things is, where is it and where is the nearest transit? Where is the commuter rail? Where is the MBTA? Where are the bus lines to it? Because we don't want to be out in the middle. Land's cheap in the middle of nowhere when it's not connected. It's just, we find, I think, as a society, I know just living in Boston myself, Boston, Cambridge, and Somerville for the last 15 years, I've lived in all three. I like that environment. I don't want to move to a place where I have to get in my car to get a cup of coffee in the morning, or I want to be in a place where I can walk to a restaurant, to
Yeah, Chris, and this is an important point which you said. I think in the urban development, right? I think it's quite possible that parking in the building should be completely exempt. In the transit oriented, like
yes,
that public, the parking should be completely exempt from the build.
Yeah.
And the reason is, it's a new business that can be created. A parking garage that will accommodate all the cars, access of the cars will be built. And that's where you can build you can put a car for the extra cost. But if you do not have a car, you can live in an apartment and use the public transportation for without any need for parking. So the existing requirement 1-to-1, I think it's outdated. It should not be in place. And again, I think one of the examples, it might be Manhattan, right?
Yeah, totally agree, especially around transit.
Garages.
Yeah,
It's a separately either built or separately retrofitted the parking garages that if you need a car, you can place it there for a day, for a month, or just rent the space.
So, with mentioning all of the development in on the Blue Line and in Revere and just around Boston in general, I'm sure somebody might want to know if they can potentially participate in investment in one such project, or how can they own a portion of the real estate that is in Boston. Maybe we can talk a little bit about real estate syndications and how they happen, and what kind of structures are in place to allow people to invest.
I think it's an interesting topic, and I know it's one that discussed a lot with everyone in this room. This kind of changing landscape around investing in real estate, and I think historically, if you look at it, it'd be one way to invest in real estate is you buy a triple decker and you become a landlord yourself. You're an active landlord. You take the calls when the plumbing goes out, when the heating goes out, when the roof is leaking, everything else, and that's a lifestyle choice. And another way that people have had historically to invest in real estate is through real estate investment trusts, REITs, or mutual funds focused on real estate. And so, what we're starting to see today in a very interesting way is a much broader access to private placements or real estate syndications for a much smaller investor than has been typically the case in the past. And while many of these syndications, still require accredited investors, Many at this point are, there are many innovative structures that are coming about to invest in real estate in a passive way, without losing the myriad tax benefits and others of owning the underlying asset, including the depreciation pass-through. So, we syndicate our deals on a deal-by-deal basis, and certainly would love to welcome people to ask questions, or happy to talk more about it. But it's an area that I've started to learn is a growing space as we've kind of, and I think technology in many ways is really enabling that in a way that never would have been possible, I think, years ago, to say have a $15,000 or $25,000 minimum in a real estate syndication, because just the administrative back end is just so high, and that's really, with technology, becoming more and more attainable. So
yeah, we see a number of different websites, online platforms that allow people to participate in the syndicates. So I think it's a great way to get to the real estate.
yeah,
We do this. I mean, we put our own syndications online for people to participate, and just, it's a new trend.
yeah,
It's been only for a few years.
absolutely, yeah. Crowdfunding,
It's Jobs Act,
yeah,
but I think it's a great way to to participate passively in the real estate and enjoy all the benefits of owning real estate directly.
mhm. Oh yeah, totally.
I think you guys both nailed it. So if you think about it, 10 years ago, we just didn't have the amount of data that we had to make educated decisions. And now there's so much data out there,
Yeah.
on the internet, in various neighborhoods, and it's all at your fingertips, like jobs that are coming in, right?
Mhm.
I think there's big jobs coming in from, like, as an example, I think Amazon's coming there, right? So you might have another 200 jobs coming. So you look at that, you look at all this job data, you look at the average income, you look at what companies could be coming, what's being developed. It's all at your fingertips now. And so the purpose of syndication is, to have, I think you have some unique advantages by syndicating, because you can build larger, better things that
Yeah.
a single person, well, a single entity can't do because of the capital requirements. And so it's coming of age, and I think you're going to see a lot more syndication going on from here forward, and a lot faster. And I think to your point, I think that the amount of capital that will go in per person will start to go down. And you may see a lot of people become serial syndicators, where they'll put $15,000 in Florida, $15,000 in Arizona, and they'll be sprinkling it everywhere, almost in a mutual, but they're controlling their own thing, and they're capturing their own depreciation, they're making their own. And so I think that is you're touching on the future.
Starting to see that, where, even people that, they've got substantial means to invest and desire to invest will say, my strategy is one of diversification. And what syndication allows me to do is not put such a large chunk of capital into any one deal or geography, but I can broadly spread that across. So, I'm not beholden to any one market. For example, say, take the risk of, rent control or something like that, where, someone who's all in on Boston, it's very difficult, because that's going to impact and drive the value of their whole portfolio down. Whereas if they're in places that might not have rent control, say like Revere, they could be in a situation where they have that diversification, where they've got a Boston asset, Revere asset. They're going to behave differently because of certain political factors beyond their control.
And they can read about it on the internet in 2 seconds, and that's an interesting point. You might be 500 or 700 feet away from a different regulatory environment, right? Which could create an entirely different net operating income on the same project that might be 500 feet over. But all this stuff is now, for the most part, publicly accessible. So it's really just understanding the deal and then having the courage or the knowledge to invest in those products. But I do think that is the future.
Yeah, these platforms like you know, a Realty Mogul, a CrowdStreet, a Real Crowd, Share States. I mean, there only going to be more of these in the future, and the quality of their underwriting, their due diligence, the way they present deals has just gotten better and better. It's really impressive and kind of exciting to see.
Yeah, and I do remember there was a minimum, I believe, of 150 1,000 before, or 200,000. Right now, it's going down.
Yeah,
Down a lot.
seeing more and more deals at
75,
25,
50,000,
15. Yeah,
25. Some of the sites allow as little as, I believe,
5, 10. Yeah. I mean, it really says, instead of that down payment, you know, and Boston, we didn't even totally touch on the affordability crisis that comes with supply shortages. But the fact is, you know, to buy a triple decker in Dorchester now, you're looking at $1 million. I mean, maybe,
Yeah,
depending on the quality of it.
Dorchester is huge, and
Depends where you're at.
that's it's so much of Dorchester to look at, and the prices vary considerably throughout the entire thing. And so, yeah,
But if you're investing, you're 300,000 just to get
to jump
in the door on the equity. So but if you want exposure,
and then you've got your renovation costs, right? And then you've got your carrying costs and delays.
You sign yourself up as an active landlord too.
Yep.
So I just wanted to bring up a question by Hardy. In your syndication deals, what's your ideal criteria? In other words, what is the minimum amount of doors you're looking for? So Chris or Oleg, maybe we can talk a little bit about that.
I think we're still on the higher end for this. I think kind of ideal is 100,000 for us. You know, in some cases can go down.
Oh, in terms of for the
That's us.
Oh, the minimum number of doors, though, I think kind of overall project size. I think we'd say, you know, we don't really want to be lower than 50 units in a new acquisition that we're going to syndicate out. So I'd say kind of most recently we'd acquired a 72 unit apartment building last year. In Revere, we're building 114 units. So it's true, when you're going to syndicate broadly, you have to have a certain scale in size in the project to make it worthwhile to your investors, to give them truly what you're saying, Demetrios, that benefit of scale. You know, it doesn't make sense for us to do deals that are so small that, you know, there are other investors out there that could do them themselves independently. If we're going to go through the process of a full syndication, we want to have a project with enough scale that it differentiates it and kind of gives enough room for investors to come in and participate. So I think, you know, I guess that in your syndication deals, ideal criteria, we're looking for transit oriented. We're looking for 50 plus doors, 50 plus units. We're looking for kind of areas around Boston Metro. That's exclusively all we do. It's the neighborhoods we live in. We live and breathe all day, every day. So I'd say that's, you know, nothing, we don't want to be too small. And at the same time, we are ourselves we're not a firm that's, you know, we're a growing firm, but we're not some international or national mega developer. We're local Boston, you know, real estate developer. I think Adam had a question. In terms of a nine unit apartment, I guess from our perspective, there are a lot of fixed costs that go into underwriting a deal, analyzing it, closing it. And in terms of our resources, we'd rather chase larger scale deals than, you know, it's amazing that the time that, you know, to do a nine unit apartment building versus a 70 unit apartment building, remarkably, in terms of a time allocation, it's not quite the same, but it's more similar than you'd expect based on the ratio of 9 units versus 70 units.
You still end up getting the whole team involved in the
The whole
acquisition
yeah.
process.
I mean, whenever you're putting investor capital at risk, it's, you know, it's serious, and you know, you can't take it any more lightly if it's 9 units versus 70 units
Yeah, your
versus
community meetings,
150 units.
your
You don't want to
community,
lose money either way.
yeah, your community time when you go in and meet with the community is the same.
Too, yeah.
When you have your, you know, your drawings and your architect plans, whether it's 10 units or, you know, 80 units, it's about the same amount of time. So there's a lot of, not much of a difference. I mean, it can get a little bit more complex, but you know, your time, money, value thing, I think has a big.
It's the economy of scale.
Probably meant
Yeah.
to save 50 units on the acquisition of the existing building and not the development. The development is
Yes.
way too small.
Yes, yeah, that's what I did, yeah.
100 plus.
50 units for a ground, for 50 units for an existing building, a value add play where we're renovating units in an existing building, 100 for, 100 for ground up development. That has it, like you're mentioning, Demetrios, its own set of challenges, permitting, et cetera. We've touched on it. Boston and the Boston region, a very difficult place to get permitted. For us, it has to be a certain scale to make sense. And yeah, we find that right now that breaks around 100 units. So
That makes sense.
And it's again the economy of scale that allows us and other developers to provide the best quality products to renters and investors alike, while being able to afford to build and operate real estate with the kind of functionality and everything that we have.
yeah, they don't. And so
So
Hardy has so we are looking to we have 2 current deals for which we are actively raising capital. Happy to talk more with anyone who's specifically interested in that. We're the sponsor ourselves here at Helge Capital, so we run the process of acquiring the property. We're a vertically integrated firm, so we have our property management team within our organization that then runs the property after the fact, takes care of work order calls, leasing calls, et cetera. So we're a sponsor looking to raise capital, but as well looking for exciting opportunities to get involved in new situations within Boston Metro. Yeah. And I think, did Adam have one question there? Nikolai, do you?
About demand from renters.
Up on that one.
for renters, yeah.
Definitely, demand has been very strong, regardless of the various economic and health crises that we've been through and witnessed. So we have not seen that much of a decrease. In fact, an increase in demand over the course of the last 5 years. And
The question is between also Class A and
Class A
and the Class B
workforce. Yeah.
workforce housing. My take on this, when economy is great, Class A is doing really great. When economy is a little bit kind of shaky or dipping or reducing, Class B demand just is skyrocketing. It's significantly higher than Class A. But still, again, that's Boston or greater Boston. It's not enough supply, so
Yeah, we see it out. I mean,
the vacancy is very low.
the real time, the RTVR and the RTR at record lows, literally. And I think on the backside of the pandemic, if you think about it, not really much new product got built. That slowed down, everything got delayed.
Yeah.
So
yeah.
it's almost a hangover effect of, we're waiting for product to catch up, but then we hit an inflationary environment and we had high energy costs and we had all these headwinds that have now stalled that process. So what we're seeing is demand everywhere, and not only in the city, but outside of it, stretching. And then we even hear stories like, well, the rent went up in Worcester, so people moved to Fitchburg, and then they went out further.
Yeah.
So, but what that tells me overall is that we're not building enough, period. I think we need to look at that in general, period. So I think that your demand in the Northeast is always going to be strong. Now, there could be different economic factors that chill that environment, but I think those would be because of legislation, not because of the capital, the infrastructure, the colleges, the innovation that we have. So I think we just have to make sure that we don't fumble over ourselves. The rest will take care of it.
Yeah.
And I think, so I don't think we're ever going to have a shortage of renters unless, of course, we have other headwinds that get in our way.
All right.
And I think that's a very good wrap. It's 3 o'clock now, so I'm sure
Yeah.
many people have other things to get to. Thank you everybody
Appreciate
so
the
much
time,
for joining us.
everyone. And
Thank you.
Demetrios, thank you for
Demetrios,
joining us.
CEO of Boston Pads,
Thank you for having me.
Oleg Uritsky, CEO
Thank you.
of Helge Capital,
Yeah.
and
Very much.
Chris Manatas Lornell, Capital Markets and Acquisitions Manager at Helge Capital, and
Well,
I'm Nikolai Inger, also working at Helge Capital. And thank you everybody for joining.
thank you. Yeah, thanks for the time.
Thank you.